Is it time to buy more Square stock? SQ is the ticker, otherwise doing business as Block. I personally own a small stake, but it's down significantly in the past year, down something like 70 to 80%. Is now the time to buy more? Have we seen the bottom for Block stock? Well, to understand what Block does, you should understand their different segments, one of which is arguably their founding segment, is Square, which started off with the point of sale, helping merchants accept credit cards. Now they've, as you can see on this page, they've dramatically broadened their offering so that they have a comprehensive, effectively operating system for small merchants. This might mean easily accepting different types of payments, easily managing payroll, helping them set up a website, helping them with marketing, inventory, subscriptions. So this is arguably the core operating system, all with one comprehensive solution. This is quite different than what most merchants deal with, which is, a piecemeal approach. And this approach clearly, I think, is winning with the market. You could see how they've rapidly grown 6x gross profit increase from 2015 to 2021. So clearly their value proposition is resonating with customers, arguably a very strong value proposition. And they're winning, or they're rapidly growing in international as well, now around 200 million in gross profit, growing at over 60% annual growth since 2015 as they've launched into new markets beyond Australia, Japan, Canada, UK, and Europe, now the rest of the world. And so it's easy to understand why they're winning. You start with one merchant that, let's say, generates 2,500 in, gross profit, and then they open up a new location. Now they're generating from that second location an additional $2,000 in gross profit. And then they say, hey, we need an online presence. Okay, still using Square, another 1,200. Or maybe they need marketing and loyalty solutions or invoices and loans. This is actually based on a real Square seller where they've said, look, this customer went from $2,500 in gross profit to effectively $9,000 in gross profit per year from this customer. As they've effectively said, this comprehensive approach to addressing their needs is really meeting the customer wants, these small merchants. And you can see that, yes, their business is definitely, 2/3 about these smaller businesses from under $125,000 in gross payment volume, so the amount of dollars going through the customer's platform, to $125,000 to $500,000. So very small businesses generally, but they have been rapidly growing in larger businesses, the over 500,000, annual gross payment volume going through the platform. Still, $500,000 is still a pretty low threshold. So generally you should think about this as smaller businesses. But an example of one of the larger businesses that they've won is working with SoFi Stadium with their concessions. Now that's just Square. They have another hyper growth app, Cash App, which is one of the leading finance apps out there, growing arguably faster than most, which enables like peer-to-peer transfers. You can have a cash debit card. You can easily make, purchases in Bitcoin or sell Bitcoin in Bitcoin trading. You could do stock purchases, fractional shares. They also have functions of instant deposits where you could say, hey, I want to get my money now. I know I'm supposed to be getting my payroll. Let's get this now, so you can get some sort of fees. And they also have some sort of promotions on, let's say, certain brands where you say, hey, I want to get this. You can get 10% off because you're a, Cash App customer. This business, just amazing growth from 47 million in gross profit to 2.1 billion in gross profit in 2021, 44x gross profit growth over a relatively short time period. So I'd argue this is definitely one to watch. And I'd argue they have a strong advantage here because they've clearly worked. This peer-to-peer transfer that doesn't cost folks much, but then you find other ways to make money, has resulted in a very low, arguably low cost of customer acquisition, where they say, look, in order to acquire a customer, it's costing us around $10 per customer, versus if you're looking at a retail bank, you're looking at $300 to $600. So if these customers are keeping their money in a digital wallet, and this becomes the new leading digital wallet, and tens of millions of people are now using this Cash App, this is very interesting because if there, you can get a spread, let's say, on the digital wallet over time. And so looking at the business, these two market segments, they think they're just scratching the surface. They're saying the gross profit potential in both of these markets is, for Cash App is around $70 billion. For Square, they're saying $120 billion. So all in, like $200 billion plus, around $200 billion. And keep in mind, that means they're just doing like 1% to 2% of what they think is the addressable market from a gross profit perspective. And that's before they even acquired Afterpay, which they completed the acquisition at the beginning of this year, which is effectively helping merchants offer buy now, pay later solutions. So that way consumers can get more bang for their buck. It's a better version of a credit card at the end of the day. It's not really a game changer in my mind, but if it does help merchants, generate more sales because it's easier to finance it, that it has become well accepted by lots of different merchants. And they, similar to the Cash App, similar to the Square app or the Square, core segment, they too with Afterpay think, yeah, they're just scratching the surface when you think about buy now, pay later as a percentage of the opportunity. But arguably management overpaid for this, because here it is, Square paid around $29 billion for Afterpay. Currently, Square or Block's market cap is only around 48 billion. And so that means this acquisition is around 60% of the current market cap. It just does suggest to me, especially given that they used a lot of stock to do it, that they overpaid for it. And keep in mind, that's not all, folks. That's just, I'd argue, the vast majority of their value. They do have these other sort of, moonshot bets like Spiral, which is around helping build open source projects to advance Bitcoin. They have Tidal, which is a music platform to sort of enable artists, and TBD, which is also tied to Bitcoin. Personally, when I look at this, I do not ascribe really much value to these yet. Okay, so where does Square or Block stock go from here? First, if you're struggling with this investment environment, consider unrivaledinvesting.com for new ideas in a community of like-minded investors. Full disclosure, this is not financial advice, and at the time of this video publication, I did own a little bit of Square or Block stock. So part of the challenge I have with Square is that they don't really have what I want to see. And what I want to see is consistent and growing profitability. And that is not where they're at. They're at the stage of like, hey, we got so many great ideas. So many things that are growing so fast. Let's just plug money into this investment, that investment. Let's just keep growing at crazy speeds. Now, they're growing at a reasonable speed. Their organic growth is around, under 20%. It's faster because of the Afterpay acquisition. But still, I'm looking at this and I don't like to see that they swung from such a large, from a arguably a small profit last year to a sizable loss this year in terms of operating profits. It's like, well, what's going on here? When you look at their revenues, I personally strip out Bitcoin. They include that in the revenue, but they also include it in costs. As you can see, it's pretty de minimis when you think about their actual operating profits. You can see it's actually under 100 million in gross profit contribution of their total 2.8 billion in gross profit, during the 6 months. So personally, I view that as a bit of volatility. They've also had Bitcoin impairment losses. So I personally, when I look at everything, I strip out Bitcoin from their different operations, even though I know Jack Dorsey's super excited about it. And then you go, well, Daniel, like, even though they're unprofitable, you got to look at what's going on the top level at gross profit level, where they're growing at hyper speeds. You're talking about 29% growth year over year for gross profit, now around 1.5 billion in the second quarter. Square gross profit growing around 30%. Cash App gross profit growing around 29%. Their adjusted EBITDA, even after all these investments, they still have positive adjusted EBITDA. Admittedly, it's a lot lower than where it was last year. Got cut in half about because of all these investments they're making. But you say, hey, look, Daniel, there's still, management calls us out. Our core segments are still profitable, whether or not you're looking at Square or Cash App. And they do this calculation saying, hey, if you factor in all the operating variable fixed costs tied to these businesses, whether or not Square or Cash App, as a percentage of gross profit, Square was at 34% and Cash App was at 12%. This is partly because they're investing so much in sales and marketing. But the challenge here, once again, like many businesses, and I find that management is deceiving themselves by doing this, is they exclude share-based compensation as an expense. The reality is, if share-based compensation, if they're paying employees with cash, which I think a lot of people would have preferred this past year as the stock has gotten absolutely hammered, they would be actually burning a lot of money, because their share-based compensation just in the first 6 months of this year was over $500 million. That is a lot of stock-based compensation. That's arguably the only reason why their operating cash flows was positive here. Same with prior years. So any sort of mention of positive EBITDA, when it's really just driven by the fact that you're paying employees in stock and you're diluting the existing shareholders, that really doesn't do it for me. I want to see real profitability that has nothing to do with stock-based compensation. I want to see, like, if you're going to do $500 500 million in stock-based compensation, I want to see at least 500 million in operating, cash flows, maybe $1 billion in operating cash flows. And they're nowhere near that now. So as we think about Block in terms of breaking up the pieces, you need to sort of say, well, what's the value of each of these different segments? So I look at Cash App, which once again had hyper growth, over 100% growth for a couple of years. Last year was closer to 60% plus. This year, around 40%. And once again, this business has incredible margins, around 90% gross margins. They're investing a lot right now. Hence, its profitability is actually lower than Square. But long term, wouldn't surprise me if this business could have around 30% operating profit margins. Now, we'll see. They got to prove themselves. They really do need to have some discipline that they have not really shown yet in terms of cost structure. So I put a range of 25 to 35% operating margin for Cash App, assume a 25% tax rate, assume growth rate does decelerate a bit in the years ahead over the next 5 years, let's say 15 to 25% annual growth. Keep in mind, this year, if you exclude the effectively the benefits from their buy now pay later acquisition of Afterpay, their growth rate I think would be under 20%, but factoring that in puts them closer to 40%. Assume some sort of multiple of 20 to 25 times earnings for this segment, thinking 5 years out, then you're getting somewhere between 23 billion just for this segment and 67 billion. On the really the high side of this case, you're more than covering their current market cap and you're getting Square for free. So then you also need to think, okay, well, what's Square worth? Effectively, their seller business, enabling small merchants. And you can see, okay, so once again, this business has been very lumpy. They were hurt during COVID because they help a lot of offline sales. So growth was very slow, but then growth picked up dramatically. And growth rate so far this year also benefiting from Afterpay acquisition, around 30% as well. Mid 30s. I'm sort of expecting slightly lower, but we'll see how that pencils out. This segment does have much lower gross margins than the Cash App. Cash App, once again, I remove Bitcoin when I'm thinking about its revenues and margins. This segment only has around 44, 45% gross margins. So I'm assuming long-term, maybe 12.5 to 17.5% operating profit margins. They're not there yet. Once again, the figures they say, really don't jive because that's using, stock-based compensation. I want real profitability, before, when you factor in, hey, we have to pay our employees. You might be paying them cash, you might be paying them stock, but that's a real expense. Slap on a 20% tax rate, partly because it's becoming an increasingly international business. Might be a slower growth rate than, let's say, the Cash App, somewhere teens, maybe low 20% growth. Assuming, once again, around 20 times earnings multiple, because it should be fairly sticky as it is a core operating system for lots and lots of merchants. So once again, a valuation similar to what I was penciling out for Cash App of around 20 billion to around 60 billion. And so when you put these two components together, you say, okay, Block currently trades around $74 a share, around $50 billion market cap. A lot of folks aren't using the right shares outstanding. You need to use a much higher figure than most people are penciling out. So around $50 billion market cap. Add these two together, the Cash App and Square, and I'm personally not giving any credit to their other bets, which so far are showing immaterial amounts of profitability or revenue. And so then in this case, you're sort of penciling out break even over the next 5 years and maybe 160% plus. If they're able to deliver. This is a hypothetical framework, keep in mind. Of course, stock price can go way higher, way lower. I like broadly what I'm seeing here. I think they've done a lot of very clever bets. They're growing very quickly. I kind of want to see just how they do with expanding their profitability, expanding their margins. This year, they're clearly an investment year. Let's see an improved profit margin figure. Let's actually start seeing real free cash flows that's not 100% dependent on stock-based compensation. Those are the data points I personally want to see before I consider making this a much larger part of my portfolio. I might consider, buying a little bit more just because it's down so much and, it is starting to have this sort of like, hey, if they execute, you could have 100 to 200% upside. And keep in mind, I'm not giving any credit here to their potential cash generation. Because really that cash generation is really a function of stock-based compensation. It's not really, huge free cash flows that I'm seeing. So I look at this and I'm saying, it seems like some of the core risks of, let's say, financing has been largely pulled off the table because they are cash flowing. It's through dilution, which I don't like. They are cash flowing. They are growing. So that's part of the reason why I do like having effectively this lottery ticket on Block stock. But I do want to see more sustainable practices. Instead of, let's say, 1 to 2% share dilution each year, let's see real profitability each year, and let's see expanding profitability. And when I start seeing that on a consistent basis, quarter after quarter after quarter, growing profitability, and management, not diluting themselves with how they calculate these things, saying, hey, this is actually the real profit figure that we're expected to generate. This is the real free cash flow that's not just from issuing a ton of stock. In that situation, I would get a little bit more confident in buying. Otherwise, I'm fine sort of owning a smaller position sort of as a lottery ticket. Everyone has to figure out what's right for their own personal investment journey. I personally, for my diversified value and growth portfolio, have a bunch of sort of smaller positions that still need to prove out their models in terms of core profitability, like block or SQ stock. And in my, larger part of my portfolio, the bigger bets are the things where it's like, okay, it's already proven themselves, and I have, let's say, quality, I have value, I have growth. It's much easier for me to sort of say, hey, this is going to do much better. So I'm making a bigger position. Something like block, it's still a smaller position. It's under 1% for me as part of my portfolio. Maybe I'd consider making it closer to 1-2%. We'll see it. I want to see execution in this investment environment. I personally want just crazy high upside potential. And so I'm not sure if it really has bottomed. Maybe you do get a bottom, maybe this has been it. I'm very skeptical of that personally. In this environment, I want really dramatic upside from here before I commit a lot of capital. I might buy little things on the margin. And I call those out to my subscribers at unrivaledinvesting.com. If you enjoyed this video talking about block or square stock, please make point of hitting that thumbs up, hit that subscribe button, and thank you for watching Unrivaled Investing.